So Bitcoin has recently tagged the 200 weekly moving average and potentially set the bottom for the 2026 bear market season. And in this video, we're going to take a closer look and see how we can take advantage. So stay tuned. Hi guys, welcome back to another video. In this video, we're going to have a closer look at the Bitcoin price and see how we've kind of made a lower low following the previous lows of February. So this officially puts us in the third phase of the bear market, and we've tagged the 200 weekly moving, bounce off of this and rallied off of this price to eventually go back and set a new all-time high in the bull season. So we did drop a little bit to 59k, which is lower than the 200 weekly moving average. But the important thing to know is that we closed that week above the line. So we're still at a critical moment right now because although we have a green candle potentially printing, I think we touched about 64, 65k. But it's important to watch this period because historically the final drop does happen in mid-June, and we're literally still in the first week right now. So what I expect to happen right now is we might tend to go a bit sideways if we do not get that particular drop and second leg down to perhaps 50k or 40k, as a bunch of other people are calling it. If we do bounce off of this, we tend to eventually just move sideways until in Q4 in October particularly, where we might get the final. In 2022 we dipped in mid-June, went a bit sideways, and then in Q4 kind of had another dip before eventually starting that ascent upwards. So it's important to note that this line has historically held the bottom for Bitcoin, although in the 2026 this was the same period whereby we had the Terra Luna and FTX collapses. So that was a bit peculiar, but historically we've bounced off of it, and this is an important line to watch. So ideally what I expect to happen is to stay put right now, although we need to have a buying mindset already. But ideally, the best approach to kind of capitalize on this opportunity is to start your DCA right now. But remember, this is not financial advice. This is I'm not a financial advisor, and always remember, do your due diligence and do your own research. But ideally, having a DCA mindset will eventually help you kind of approximate the bottom, because you're never going to be able to time the bottom, but DCA helps you kind of approximate that. So this is a really important moment, and I just thought I'd make a video to kind of bring it to attention. And if you look at the RSI right now, we are sitting at about 34 thereabouts, and which is below the midline of 40s, 50s. So it's really a good opportunity to kind of start stacking your bags right now. But remember, DCA helps you kind of approximate the bottom. Do not try to buy all that right now, because remember, we might still get a bit another leg down that kind of takes us to either 50 or 40 depending on whatever happens. And also remember the a bunch of other economic events following the war and other things happening right now. So be mindful. DCA helps you. So without any further ado, I just thought I'd make a video, and if you do like this video, don't forget to share, like, and subscribe, and leave a comment down below. Let me know if you're already positioned, if you're taking advantage of this opportunity, or if you're already or if you have a mindset that the bottom is not in right now. Without any further ado, I'll see you guys in the next one. Bye.